Welcome to the Robert Hunt Financial Market Update. It's your host, Robert Hunt, where I look at the week's financial news that can be a bit confusing, misleading, and take you, of course, help to make it actionable, understandable, and clear. There's still a touch of ice left. It hasn't melted completely, but we're very close here in Dallas, Texas. And we've got some excellent financial news to sort through. Each article has a profound application. You're going to want to stay to the end of the episode, maybe bring in the kids and grandkids, maybe the nieces and nephews as well. One of the articles, headline, AI threatens a Wall Street cash cow, financial and legal data. We're just going to talk about the AI threat that is out there for existing companies. We then talk about, that's right, SpaceX. Have you heard of SpaceX, Elon Musk's company that puts Starlink internet and has their rocket boosters go up? We're going to talk about how SpaceX wants an early index entry as it prepares massive IPOs. Once again, Elon Musk looking to get bailed out by us, the index fund investor. And then in closing, it wouldn't be a great episode unless we did a little bit of crypto talk. And we're going to be talking about an article in the Wall Street Journal headline, "The Crypto Hoarding Strategy is Unraveling." So they talk a little bit about a gentleman named Michael Saylor, who his company, MicroStrategy, they really went all in on Bitcoin, and now they're in some trouble. So at the top, let's talk about AI threatening individual companies. This particular article, AI threatens a Wall Street cash cow, financial and legal data. It goes into what was recently a significant market sell-off in the software sector. So here's the deal. There are artificial intelligence companies whose products are either so good or expected to be so good that some software companies, their stock is plummeting. Down 10, 11, 12, 13% in a day when some of these models come out. Why is that? This particular Wall Street Journal article talks about financial services, legal data services companies, and how a lot of these companies think they're going to be fine because they own the data. The AI can't, take the data. But it highlighted to me how difficult it is in a period of profound technological change, which we've had in this country, 1870 to 1920, a lot of changes. I know a lot of my listeners weren't around then. Profound changes. It is being said that what we are entering into is analogous, but even in a shorter time frame, to what the American family experienced 1870 and 1920. A lot happened. The airplane, the automobile, so many different profound transformational technologies, and it makes it tough to invest, believe it or else. It's easiest to invest when everything stays the same. It becomes difficult to invest when the landscape changes every week, every month, every year. If artificial intelligence continues at its pace, there will be businesses whose offerings, which they previously had a moat, it's Warren Buffett language, moat, a defensible strategy against other companies, that moat will go away. When big technological shifts happen, moats go away. So this big sell-off, which shocked me, in my investing career, I have not seen a single technology move the market this fast. Now, I could have missed it, but to move this many companies' share price that fast on the prospect of a great artificial intelligence model, I have not seen it. And here's the risk. If Claude or OpenAI, that's Anthropic, Claude, OpenAI, Gemini, one of these frontier labs really creates something that lets you just speak software into existence, it's going to be hard to sell software. It's going to be hard to sell software as a service. This is just one example. AI could affect a whole host of businesses. Tesla now is saying they're going to build these humanoid robots that can do anything, or there'll be robo-taxi services that'll affect a whole number of business models, including car manufacturing and Uber, if they are able to jump on board. I think you may see where the punchline is going. It is of great benefit to you, the investor, to me, the investor, to spread out our bets and not place all of our eggs in one basket because of how volatile that basket will be in an era of profound technological change. The temptation for many people will be to just buy silver or gold or land, which are all permissible strategies, land especially, and use these kind of fear-based moves to preserve capital. I think over a 50-year time frame, it will be of greater benefit to those who went out in the ocean a little bit, were willing to purchase the index fund, which bets on a whole host of companies, knowing that very few are actually going to generate returns that are meaningful at all. You know, that data that only 9 companies account for 100% of the returns, or there's some crazy figure on index funds that shows, if you put most of these companies together, they return about what cash returns. And there are a few outliers, just a few outliers, that actually contribute to any of the return you get. So if you don't pick them, you're in trouble. If you do pick them, you're a genius. Let's buy the whole haystack, not try to find the needle in the haystack. And since we're talking about index funds, boy, this was an excellent article. If you are an index fund investor and you're listening, you should feel great about this. Headline: SpaceX seeks early index entry as it prepares massive IPO. Subheadline: Musk advisors have reached out to major index providers seeking ways to secure earlier inclusion in market benchmarks to lift shares. Well. If it isn't Elon Musk coming with a request from us, the index fund community. Now, I'll give you a little nuts and bolts of the article, and then we'll go high level. SpaceX is a private company. They don't have public shares. They have a bunch of investors who've contributed capital over the years, a bunch of employees with shares. They recently merged with xAI, Mr. Musk's artificial intelligence company, to have this one large private company. And guess what? They want an invitation to the dance. They want to go to the ball. They want to be in the S&P 500, the NASDAQ 100, or any other number of indexes. This article explains it was last valued at $800 billion. SpaceX is targeting a valuation of more than $1 trillion. It would be the largest ever U.S. IPO. Wow. SpaceX and AI startups OpenAI and Anthropic are expected to list as soon as this year. It would be a banner stretch for IPOs. Listen to this. Finding a stable investor base will be important to their long-term success as publicly traded companies. So what this is just incredible. This SpaceX is probably one of the more incredible companies to ever exist. Developing rocket technology is just out of this world, no pun intended. Did you hear what they need? They need the index fund investor. Has anyone ever told you or sought to disparage you and your investing strategy as an index fund investor? Have they ever told you, oh, you index fund investors, you don't do anything for society. There's no societal benefit to buying an index fund? Which, of course, we have to smile and nod and oftentimes just not answer. It's not worth the time. But articles like this bring to the fore the incredible importance that index fund investors play in the world. We must remember, like Lion King, it's a circle of life. And if you're a 1990s Disney fan and you remember Lion King, Simba's running through the grass and his father is teaching him how to hunt, what to hunt. And Simba tells his father, he says, well, why do I care about the grass? I'm just here to eat the gazelle. And Mufasa's father says, yes, but the gazelle eats the grass and we eat the gazelle. See, it's a circle of life. Well, there's a circle of capital allocation that every single allocator plays an important role for job creation, for economic dynamism, for products, goods, and services, and the index fund investor is the last to eat on the line. We let everyone go before us. After you, after you, after you, after you, after you, after you. Early stage investors after you, angel fund investors after you, venture capital investors, late stage private investors, IPO investors, fund investors, then the index funds are able to step in because there are a number of rules. So what do they want? Elon Musk and team want to be in the indexes now, today, as soon as possible. Right when they IPO, they want that large, stable tsunami of capital to come in and buy these shares because it's of great benefit to these companies to have long-term holders that aren't going to be popping in and out quickly. That's what the index fund does. So when people are starting companies, they may not be cognizant that, oh, wow, I can't wait to sell my shares to an index fund. But I bet what they do think is, boy, I'm going to start this company and sell it one day for a lot of money. And that's a motivating factor, not for everybody, but for a whole lot of people. Just knowing that's a possibility, hugely important for people being incentivized to start businesses. Without the index fund investor, it's not as dynamic. It's not. 1976 happens, the index fund comes out, it's a nothing burger, it's small. Well, now it is trillions and trillions of dollars. So powerful that even Elon Musk, who has disparaged indexes funds in the past, is coming hat in hand to you and me on a knee saying, please take me early, take SpaceX early, because they know how important it is. So always remember, index fund investor, there's incredible societal good just for being an index fund investor. You play an incredibly important role in the economic dynamism of not only America, but of the world. If there were not investors who are willing to wait to the very end to eat, which is what you do. And a lot of people will mock the index fund investor for this very truth. The early investors in SpaceX, Peter Thiel, Founders Fund being one of them, I forget, he must have put in tens of millions of dollars and he'll have a stake worth hundreds of billions of dollars. It's one of the most incredible early stage investments in the history of angel investing. But he gets those results. 9 out of 10 of them fail, 19 out of 20 of them fail, but this one worked. He should reap those rewards. The index fund, we buy in at the very end. We buy in at the $1 trillion market cap. We don't get any of this run up. But we spread our bets out. For every SpaceX, there were 10 others that failed that we didn't have to take the loss on. So we wait till the end. All these other investors get the run up. We're there, happy to play our role, happy to. It's our pleasure. As the folks at Chick-fil-A say, after you buy a tortilla soup cup, my pleasure. As an index fund investor, hey, our pleasure. Happy to help liquidate some of the holdings of these early employees, happy to buy those shares. We'll put them in the index. We'll hope for the best. But never let anyone tell you, index fund investor, that there's no societal good to index funds. You're seeing it writ large here in the Wall Street Journal. They need you. And they need you in large numbers and large amounts, because a stable capital base is critical for the formation and sustaining of dynamic companies both in America and in the world. And without the index fund investor, it's not the same world. If you've ever seen It's a Wonderful Life, you see what happens. What's a world without index funds? Not as good. Not as good. And then in closing, we talk about the challenges of being in the crypto space. It's a tough season for anyone in crypto. Headline, the crypto hoarding strategy is unraveling. Subheadline, and this is a couple days old, the article by Vicky Huang, Bitcoin fell below 76,000 on Saturday. Sadly, Michael Saylor's strategy, this is a company, with paper losses on its token purchases. So this is tough. So if you're not familiar, Michael Saylor has a publicly traded vehicle MicroStrategy who essentially issues shares of stock and buys Bitcoin. He has a very strong thesis that Bitcoin's going to $1 million per coin. As you read in the headline, at the time of this printing, it was 76,000. Now it's below 70,000. So it's 68,000 or so, maybe a little above that at the time of this recording, which is below his average cost. So this article explains shares of Strategy, which they own more than 700,000 Bitcoins. They fell 7% on Monday. They're down 61. The shares of the company are down 61% since Bitcoin touched its record high on October 6th. So down it goes. I don't know, and I never have known what the price of Bitcoin will be in the future. In fact, I've had moments, and I think I've mentioned this on the podcast, where, hey, a client says, hey, should I buy Bitcoin here? And I think it was at 30,000 a coin or 25,000 a coin. I said, no, don't buy Bitcoin. Well, it went up to 120. He would have quadrupled his money. So in humility, I just have to say, I have no idea. But, and this is where philosophy of investment is so critical. There's no rule that says Bitcoin has to be any price. There's no rule. It doesn't produce a cash flow stream, so you can't value it on a discounted cash flow model basis. You can't say, oh, I'll pay, I'll presume it has a 10% cash flow yield and I'll pay on that. I'll pay $10 for every $1. Well, it doesn't work like that. It's really seen as a store of value, digital gold. So you're unable to have buyers come in who are bargain buyers because intrinsic value is so difficult to determine for those folks. And this isn't just true of Bitcoin. I think the larger lesson here is that asset prices do not care about our feelings, what we think something should be worth. Who was it? It was Michael Burry, the gentleman who did The Big Short in 2008, who sees a short everywhere, no surprise, sees it in Bitcoin. He says the value of Bitcoin is zero. Now, I don't know. You're hearing me say, I don't know. But for the fundamental investor, it has to be zero. Bitcoin could go to $1 million a coin. It really could. It could go to 50,000 a coin. It could go to 10,000 a coin. With any investing strategy, one of the things that concerns me about Bitcoin, there is no cash flow for you, and there is no really replacement. You can't come in and say, oh wow, I've got a Bitcoin. There's utility here, like a piece of land maybe that you can't sell. At least there's some utility. It doesn't have that. And so the warning here is, can you keep your time horizon long with something like this? Because guess what? They could see something I don't. This truly could be an asset class, as its greatest proponents and Michael Saylor say, that will change currency and investment forevermore. Could happen. But can you keep your time horizon long? It does keep the cost low. It keeps the investing simple as well. It's liquid. You can sell it. But I think we will watch Michael Saylor. We will not delight in any way at his calamity, knowing this very well could be us, and he may be right. But it is a great reminder to me, and it should be for all of us, not just Bitcoin, but for any gold, silver. They took a huge tumble this past week as well. Anything that doesn't produce an income stream, it's just worth whatever someone else will pay for it. It's very tough to hold on to it long term, and it's very difficult to make sense of price action. I was screening the Bitcoin message boards on Reddit, and you would think the world had ended. It's over. We were lied to. Most of these people have lost money because they just bought recently. So you've got to go back to the basics on no matter what asset you're buying. And always remember to keep your cost low, investing simple, and time horizon long, because that is what's going to give you the best shot on your investing journey. Until next week.